This is Matthew Carter from Trader University, and today I want to talk about Bitcoin and Tether FUD, fear, uncertainty, and doubt. If you're interested in Bitcoin, if you're interested in learning trading strategies that actually work, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. So I've been getting a lot of questions about Tether USDT and its influence on Bitcoin. The basic thesis or the allegation is that Tether Unlimited, which is the parent company of the stablecoin Tether, prints a bunch of USDT that's not fully backed by US dollars, and that this is somehow used to pump Bitcoin's price. And you see this a lot, especially on Twitter. Bitcoin's going to crash once the SEC goes after Tether. And these are normally promulgated by people. A lot of the XRP people are dumb enough to believe this. Here's Crypto Bull saying that people who are buying Bitcoin at 20,000 at the beginning of the year must be really bad at math. And here's DWXRP saying, wait till Bitcoin's taken down by Tether. But let's back up a little bit and talk about what Tether is. So Tether is a stable coin. It's pegged to the US dollar. So 1 USDT equals 1 US dollar. This is assuming that you're able to redeem it for that. Tether is issued by a fairly controversial company called Tether Limited, and there have been a lot of allegations over the years that Tether Limited does not have enough US dollars to back up one for one all the USDT that it has. And even in 2019, the lawyer, the chief counsel at Tether Limited came out and said that each Tether is only backed by 74 cents in cash and cash equivalent. So if you hold Tether, you have various counterparty risks associated with it. There's also this unclear relationship with the Bitfinex exchange, and so it's kind of a murky area. I would personally never hold Tether. They don't do audits or anything like this, as far as I can tell. But the real allegation here is that somehow Bitcoin's market cap is being pumped up by the issuance of unbacked Tether. So if I can print my own money and use it to buy Bitcoin, presumably I could drive it up a lot more than otherwise. If the Tether has to be backed one for one by US dollars, it would make this pumping less doable. Now, there are a number of scholarly papers on this. Actually, we should back up and just say USDT Tether is the largest stablecoin by market cap, currently 22 billion. The next largest is USDC, which is a little bit more of an onshore coin in the US that looks like it's received a much better approval by recent regulators. Its market cap's only 4 billion. So Tether is the big stable coin still. These allegations that the price of Bitcoin have been manipulated by Tether, they stem from this paper that called Is Bitcoin Really Untethered? And this especially looks at the period in late 2017 when Bitcoin was going up to 20,000 before it crashed. So this is the paper. They look at a very small sample size, and it has since been debunked. This hasn't made its way into XRP Twitter, but this paper has been debunked by a couple of papers. A couple of people, Richard Leon and Ganesh Vishwanath Natraj. So you can read about it here. It gets fairly technical, but they go through and debunk the original paper and talk about what really drives stablecoins. Obviously, when there's a crisis, liquidity crisis, as there was in March of 2020, there was a lot of money that went into stablecoins. They're much easier to move around. People worried possibly about capital controls, etc. And so this is the real driver of stablecoin growth. There's another paper here that I'll link to by Wang Chun Wei, that also talks about this conspiracy. Tether grants to not Granger cause Bitcoin returns. You can see it gets fairly technical, the terminology. It's unlikely that Tether manipulation caused the 2017 Bitcoin rally. Now, what we can tell just by looking at it, you don't even need to be a statistician. Right now, the market cap of Bitcoin is 763 billion. Market cap of Tether, 23 billion, 24 billion. if the bulk of the market cap of Bitcoin were being driven by Tether grants and new Tether issuance that wasn't backed by US dollars, we would expect perhaps this to be a much larger percentage. But Tether's market cap as a percentage of Bitcoin is just 3%. This really would be a case of the tail wagging the dog if it were true. It's not true that Tether pumps Bitcoin. What pumps Bitcoin are long-term hodlers, and what's also pumping Bitcoin is the huge wall of money coming in from Wall Street. You don't have to look for some shady offshore company like Tether to explain this. You have MicroStrategy, you have the GBTC, the Grayscale Bitcoin Trust. You have all these Wall Street firms coming up with Bitcoin products and buying Bitcoin. You have Stanley Druckenmiller, you have Paul Tudor Jones, etc. There's literally a wall of Wall Street money. A lot of people use Tether just as an excuse. These allegations, they never go back and really talk about these follow-up papers. They debunked it. But I think it's a way of people comforting themselves, unfortunately, for having missed out on a lot of the Bitcoin rally. And it makes people feel better if they think there's some shady conspiracy like this. But it's actually all out in the open. Wall Street loves Bitcoin now, and that's the real wall of money. This 23 billion is small pocket change when it comes to Wall Street. If they want to pump Bitcoin, they don't need to go through some stablecoin or something. They can actually exchange trillions of dollars for Bitcoin. So just this relative market cap size should be enough to debunk it for most people. If you want to get more technical, you can go read these couple of papers. We can see that one of the main reasons that Tether has grown, in addition to the fact that it's a stable coin and it has this, you can move it more easily, with rather than moving it through the traditional banking system. We can see here on Binance, for example, the trading volume between BTC, Bitcoin, and USDT, trading volume 25 billion versus just 8 or 9 billion for the trading volume versus the US dollar. But what people do is they move US dollars onto these exchanges, they convert them to Tether, and then you can use this for various arbitrage opportunities. So if I'm doing arbitrage, and let me explain quickly what that means. Here, for example, is a map of Bitcoin's price all around the world. So we can see, for example, here in France, we can buy Bitcoin for $41,459, and then maybe over here in Turkey, we could sell it for $42,854 and capture approximately $1,400 difference there. Now, not all of these things are arbitrageable, but the basic idea is you buy Bitcoin in a part of the world where it's cheap, and then you immediately move it to an exchange where it's more expensive and sell it. And so stable coins like USDC and USDT are a very nice way of holding your profits and also moving the money around. So if I need to move the money from Binance to some exchange in the Middle East or in Europe, it's very easy to do. If they accept USDT, I don't have to do a SWIFT transfer. I don't have to do a wire and wait multiple days, or international wire and wait multiple days. Instead, I can just quickly zap my US dollars in the form of USDT around the world and use them for this kind of arbitrage. So this is one of the real use cases of USDT, USDC, and some of the other stable coins for this kind of arbitrage. And this is one reason you see the volume so high. People move in and out, traders move in and out from Bitcoin into USDT and back into Bitcoin, especially if you're doing short-term trading, etc. Now, when they're holding it in USDT, there is counterparty risk. Those USDT are on an exchange as well, so there's kind of double counterparty risk. But this is the real use of USDT. It's not to pump the price of Bitcoin, as you can tell by the relative market caps. Nic Carter has a great chart here. I wasn't able to get a more extended version of it, but this is basically a chart of Bitcoin price growth versus Tether supply growth. The blue line is the 1 month price growth in Bitcoin. So the percentage that the price has gone up in Bitcoin over 1 month. The red line is the money supply growth of Tether. And we can see that there's actually a lag here. So when Bitcoin spiked, the price spiked at the end of 2017. This is what we're seeing here, these big movements. Tether was moving up the whole time. And there's actually, rather than if Tether were pumping Bitcoin, you would expect this peak in Tether to come sometime before and somehow drive the Bitcoin pump. But instead what's happening is as more and more people become interested in Bitcoin, they convert more money into Tether. And so you can see here, just looking at various peaks in Bitcoin price where it moved up a lot, the supply growth in Tether always is a lagging indicator. And this suggests that Tether's not being used to pump Bitcoin. Those papers, those scholarly papers I've referred to earlier, also talk about this. Finally, tweet from Stuart Hogner talking about looking at a very interesting period in history, really kind of the depths of the last Bitcoin bear market from February 2018 to July 2019. Bitcoin's price really didn't go anywhere over that period of time. It was roughly flat at $11,000, maybe moved up a few $1,000s or down a few $1,000s, but started and ended the period at approximately 11,000. Meanwhile, the supply of stablecoins over that period increased from 2.3 billion to 11 billion. And the bulk of these stablecoins were, as we saw, USDT. So if, as Stuart says, if the creation of stablecoins somehow buoyed the price of Bitcoin, why was its price unchanged as the supply of stablecoins increased by 400%? And he rightly points out that critics fixated on Tether have no answer for this question. So the real thing pumping Bitcoin is Wall Street. It's also the fact that it's just a brilliant new technology. It's a much better money technology than gold. It's a great place to store your wealth as a store of value and also grow your wealth. There are lots of strange conspiracies like this. A similar one is that somehow the US government invented Bitcoin and they're going to try to get everyone into it and then they're going to pull the rug out. These kind of bizarre conspiracy theories, when in fact everything is really out in the open. The Fed is printing madly simply to fund, they're printing US dollars at an extraordinary rate to fund US deficit spending. Tax receipts no longer cover US government spending. We have this huge deficit gap that will be plugged by the monetization of the debt. This is freely available data that's available to anyone from the Federal Reserve site. And we can see what happens as the Fed prints, what it does to asset prices like stock prices, real estate prices, and Bitcoin. Bitcoin is the scarcest store of value asset there is. And as such, it will continue to pump whether or not Tether is on the scene or whether Tether goes away and is replaced by a central bank digital currency or something like that. If you found this video helpful, please hit the subscribe button, hit the like button, and hit that notification bell if you want to be notified when I publish my next video. Let me know your questions and comments in the comment section below if there are other conspiracies or other FUD that you'd like me to debunk relative to Bitcoin. These are terrible, terrible things when people say that Bitcoin uses too much energy or that it's backed by the CIA or backed by Tether, these kind of stupid things, because it really prevents a lot of people from getting rich. And if you've been listening to me for the past year and you've ignored the stupid FUD, you've done really well. And so I'm trying to sort of systematically take down these detractors and these false allegations. You can see the people who still put their faith in XRP, what's happening to them, and it's very sad. I'm trying to get as many people away from that as possible, but some people are very stubborn, especially when your Twitter handle is XRP Doggo or something like that. It's impossible to your identity is so tied up with these conspiracies and with terrible coins like XRP that it's hard to exit. Thanks a lot for watching this video, and I'll see you in the next one.